Good evening, this is Giuseppe Basili. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @Fibstalker nickname. Good evening, this is the Fibstalker view on currencies. This is part of my newsletter I'm going to send out on Sunday, December the 9th for December the 10th. If I'm able to, otherwise I'll send the next day. But you'll get this information only if you subscribe my newsletter. You can go on FibonacciStalking.com. On the left side you'll find a picture and you can click on it and insert your date and I can send it to you. I'll be very happy to do that. In this Fibstalker view on currencies, I typically review the dollar index and four pairs: the pound versus the US dollar, the Aussie Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and US dollar versus the Japanese yen. So let's start from the dollar index. I like to start from the weekly chart because we can get a better picture and a bigger picture of what's going on this index. And what is important to notice is that the dollar is under pressure. I mean, we have on the weekly chart, which you see on the screen, is the weekly chart of the US dollar index continuous contract aligned to a December expiration. This contract is still on the ICE US exchange. What you see here, where I just traced this as a resistance level in 83.90 area, and this is pushing prices lower. And on the other side, bulls were pushing the price of the US dollar higher with a setup in 79.20, but price never made it to the first target in 85. So the bulls are in control, although we saw some reaction here at new lows recently, and this pushed price higher. However, we also have another resistance level, which is traced from the highs in mid 2012 to lows in September, and we can see here these resistance are in the 81.60 we have been tracing. Now, I haven't seen the recent developments in the euro, and we saw also this big spike here on the daily for the dollar index. I'm going to trace the resistance area again. We cannot exclude that this level is going to be tested, or the 20-day moving average is going to be tested again. And if that happens, this would mean on the US dollar, on the euro dollar FX currency future, a test of the 126.30 area. So we have to wait here. We had this pin bar here, this reversed hammer here. I mean, I don't follow the candlestick, but this could suggest weakness, at least in the first 2 days, 1 or 2 days here in the dollar, but price will keep going higher anyway. So we can expect a retest of the 81.60 area here. Having seen this action, the dollar is not going to move lower as we were expecting, just continue lower as it happened in the past. So I think we need more consolidation here, maybe into the end of the year. Moving to the pound, I want to notice an area of support here for the pound, and this is trades from the lows in 2009 to the highs in 2009, and this level of support 150-70 initially was not respected, but starting from the end of 2011 and beginning of 2012, and then again in April 2012, this level was tested more than once, offering support 150-70. So we have support in this pair, and this could push price higher into 178.70 area. Now let's look at the daily and let's see what we can infer from the last action of this forex pair. So we had this level of support, and this is the support corresponding to the 126.65 level in the euro, and we also have to consider the all the way alpha way back, and this could be a level that could actually trace in the future. Now, what happened this week is that we had a sequence of measured move higher here, and the move we were looking at was this move here, and we had support in the 159.70 area. and we hit the first target in 160 90, 161, and but the next measured move, the next move in this sequence did fail. And actually that's something very similar to the euro. What happened to the euro? As you can see here, price came down below 160 20, 160.24, 160.20, and this decreed the end of this move higher. So the next thing we can expect is a test of indicator resistance here, indicator support here, and a test of the 159.70, 159.80 area right on top of this 20-day moving average, and this could actually provide some initial support here, but it's possible that it will keep moving lower. Now, if the 159.35 level is violated, then even if we have a reaction higher, this level, the 161.20 area is going to act as a resistance. So we could see actually price retest the 158.26. Moving to the Aussie versus the US dollar. On the weekly, we are in a bull flag, and it's very clear here because we can trace this level of support from this point here to this area here, and we have support in 195.70 area in 2011, again mid of 2012. So this is pushing price higher. Moving to the daily, we can see that we have a level of support here which can be traced. It's actually an extension, can be traced from these highs to recent highs, and it had support in 170 area, and this level of support is actually pushing price higher. And we also have some middle traces here, and this one is showing a target 105.60 or 105.50 area, and within this move we have another setup, which is the setup we have been following since last week, and as we see, it traded almost to the pip with a support in 103.80 area 90 area, and it has a target in 105.31, and the next target will be 105.60, and then we could see actual retracement. However, we can get dollar strength here, so we have to be very careful with this pair, and it's possible that this pair is going to retest to 103.89 and even the 103.20, so we have to be very careful here. Moving to the US dollar versus the Canadian dollar. On the weekly, on this pair we have resistance on the larger time frame with a trace that has had participation on the short time here from 105.70, as we can see, and recently we actually traded another level of resistance here just 4 weeks ago, and we identified this level since a few weeks. It's 104 and this is pushing price lower into this first level of target, which is 0.9530. So the US dollar, the Canadian dollar is going to reinforce against the US dollar here, and now on the daily we can actually see a little bit better this move, and actually we have this resistance 104.40, and it's pushing price lower, and price kept moving lower this week as well as expected. Besides that, the big spike in the US dollar, so besides the US dollar has been going up the last 3 days of last week, we saw the Canadian dollar being stronger here, and this pushing price lower. So maybe you won't see a big of a retracement here. What we can see here, it's this level of resistance which was traded a little bit dirty in 0.9950 area, 40 area, but then this it traded then clearly this week, and it also hit the first target in 198, 199 basically. So what we can what we witness here, its next sequence, which was a little bit dirty here, but I think it's possible if we get US dollar strength, probably a retest of the 0.9914, and it's possible that price could be pushed even higher to the 0.9950 area to meet this 20-day moving average. And finally, I'm going to close with the US dollar versus Japanese yen, and here we have this very long 2-year formation, sideways formation here, and it seems that this is a reversal formation. So this chart is suggesting that the Japanese yen is going to be much weaker than the US dollar. So in this currency war, it seems that the Japanese are doing better at the moment. And moving to the daily, I'll show you the move we are in at the moment. So we identified a few weeks ago this level of support here, which to the pip basically, and we had support in 79.10 area, and we hit the first area in 81.40 and the second in 82.60. And those who follow me will remember that I have indicated that I had identified the anchor that would actually we would use to keep trading this pair, and identify the 81.80 area with a stop below 81.50, and this is still working. As we can see, price found resistance twice here, and the first target is in 83.30 and the second is just at the previous high in the 82.90. That's all for this week. I hope you enjoyed this review. I also hope it's useful for your trading. If you have any questions, just contact me on my blog and or tweet to me at Fibstalker. If you like this video, I typically publish this video with a few days of delay. Sometimes it's very often it's 6 days or 1 week. So if you want to receive these videos on time, just subscribe my newsletter. I'll be happy to put you in the distribution list for free. Thank you very much for your attention. I wish you a very good week. I look forward to see you on my blog, and thank you, and bye bye.